Thank you, Glenda. So y'all are invited next month, just give me credit. Okay. So we're going to talk a little bit about your year-end tax considerations. There's a lot to cover. There's a card on there on the table, so email me for the slides because you won't be able to get it all. We're going to be going really quickly. So what I want to do is, first off, I want to make a disclaimer. What I'm doing here is just information and awareness. What you need to do is it's not tax advice because everybody's tax situation is extremely different. And so these are just things you need to consider to take up with your tax person. If you have a tax person, make sure it's a tax professional. There's a big difference between a preparer and a professional in that finding a good tax preparer is professional, somebody who has knowledge in the tax law. We, as a CPA, John and I have to take 120 hours of continuing ed every 3 years. That's 40 hours a year, which is more than attorneys or doctors have to take. And to make sure that that person knows your area of business, make sure your philosophy matches theirs as far as your business and the risk tolerance that they're willing to take. If you are an aggressive person and you have a very conservative accountant, it's really not a good match. So we're going to talk about year-end tax considerations. And we're talking about first tax considerations overall because you've got to have a good base to build on in order to figure out what to do before the year end. Remember that all tax decisions are part of a good economic decision and that all good tax decisions are also good economic decisions. So if somebody tells you, oh, it's okay to buy this because you can deduct it out of your tax return, it may not be a good economic decision. Take a look at the whole thing. Unless, of course, it's a toy and you're a guy and you go, hey, I could write this off. I'm going to buy it anyway. So let's talk about tax savings versus tax deferral. Most of the things that you do are not really tax savings. It's just kicking the can down the road. You're going to put it off till another year. So when you need to consider, is this year a better year than next year is going to be? What's the tax brackets going to be? We have the lowest tax brackets we've had in some times here between now and 2025, although I understand there's an election in 2020. I've heard that. And there may be some changes after that, but my crystal ball is not working. So record keeping, in order to get to the information you need to get good tax planning, you got to have good record keeping. How often do you do it? And the amount of detail you keep it in will make a big difference. And some of that is how often you do it. You remember better and may be able to come up with more deductions. Because remember, on record keeping, inch by inch, it's a cinch. That's every week. Yard by yard, it's hard. That's every month. Mile by mile, it's a trial. That's if you try and do it once a year, okay? And an appeals officer once told me, he says, you know, we get more deductions disallowed because there's bad records rather than there's a problem with the tax law. So just remember, record keeping is a key to getting and keeping deductions. So why do you keep records? I'm going to open this up, because what information do you get? How do you apply it? And give me your feedback. Why do you keep records? Anybody? So you can understand your expenses, Sally? So you can write off things, right? IRS is a big motivator for a lot of people. Dallas, did you have something?
If you don't measure it, you're going to miss it.
Yeah, if you don't measure it, you can't manage it. Okay, Richard? So you can remember what you did. Yeah. Dale? I'm sorry, what? Identify trends. All these are really important things to have a record keeper. So if you're not keeping records currently, if you're spending a lot of time keeping records, either one, just remember it's important who's keeping your records, because it may be that the best thing for you to do is to give somebody else to do the records. Yes, I know it's going to cost you money to pay a bookkeeper. There's several that are part of E4E. But the thing is if your bookkeeper is doing your bookkeeping and you're getting accurate records, what could you be using that time for to create the money to pay for the bookkeeper? And it's just, remember, if you're doing it and you're not a trained bookkeeper, you're only getting an amateur job. So, and if you decide you're going to do it yourself, then just think about it. If you save $2,000 in taxes by keeping better records and you're spending an hour a week, that you're making, it's a profit center. You're making $38.46 an hour, plus you've got peace of mind. Okay, now if you are, my recommendation, if you have a company, an LLC or a corporation, then it's a good thing to do once a year. These are good for tax planning, although it's legal stuff too, is figure out what the salary is going to be, what your guaranteed payments to partners may be. If you need to have an accountable plan on how you reimburse mileage or your auto expense, your health insurance, what you are going to be reimbursed for, and how you're going to do that, and how to handle your home office. Timing of deductions, again, is it better this year or next year or several years down the road? For income, you're going to pick it up ordinarily when it's invoiced. For expenses, it's going to be when you get paid, and that will depend on your accounting method. Accrual method, which most people don't use unless you're a bigger company, or a cash basis, which says you're going to pick up income when you receive the income, and you're going to take the deduction for the expenses when they're paid. Now, how do we know that they're getting paid? It's when the check is written and mailed. So if you date a check December 31st and mail it December 31st, you can take the deduction this year. Don't make the mistake of dating a check December 31st, mailing it January 15th. It really shows up on the bank statement. Credit card, it's when you actually put it on the card and post the statement. But if you're charging something like, let's say you're buying office supplies from Mark, and then he bills you for it, you don't get to take it until you actually pay Mark for that. Other things to do is stock up on supplies at year end if you need the deductions. You may want to buy equipment. If you're going to buy a computer in the next year or two, next month or two, think about buying it now. Or maybe making a vehicle purchase if that's going to be beneficial. All these things need to be discussed with your tax professional. Now, vehicle considerations, of course, the big question we always get is, should I buy or should I lease? The answer is yes. Don't steal the car. Do I take standard mileage? Do I take my actual expenses, a percent of them? And either way, you've got to keep track of your miles. It's important to do. The key is to increase the percentage of business use by redefining what you're using your car for as business. So figure out a way to do that. Vehicle considerations, if you're doing standard mileage, then it's based on the number of business miles. If you're using your partner's car occasionally, you can use a percentage of the partner's car as well as your own. Standard mileage for 2019 is 58 cents a mile. We haven't got the amount for 2020 yet, but give you a comparison, in 2018 it was 54.5 cents a mile. In addition to that, you can take tolls, 100% of the business tolls and parking, and a percentage of the business and personal property tax on the vehicle. Actual expenses, you just take a percentage, but you take the business miles, divide by total miles, and take a percentage of the actual expenses that you're paying, the gas, oil, lease payments, which may be limited, interest, taxes, and the like. Now, if you're some of the things that came in 2018, you got to consider. The Congress in its infinite wisdom said a luxury car is anything of $15,800 or more. In 2018, they said, oh, well, maybe it's $50,000, which seems a little more realistic. Then the other thing to consider is trade-ins. They made a change in the tax law. Now, when you trade in your car, when they give you a trade-in allowance, it's considered a sale. So you may have a gain or a loss on the vehicle when you trade it in. Just something to be aware of. Like-kind exchanges are now limited to real estate and do not include your vehicle. Again, take a look at the depreciation limits, bonus depreciation, and if you buy a truck of 6,000 pounds or more, you can write off the whole vehicle in 1 year. If you're purchasing assets, there's a number of ways you can deduct the assets. One of them is Section 263, which says we have a policy that anything under $2,500 gets expensed, and you just write off, but you got to have the policy in the minutes. You can take bonus depreciation for 100% or Section 179. Talk to your tax professional. Big topic now, the 20% deduction for business income. That came in 2018. A lot of questions on that because it's a very complex set of circumstances. And let me tell you, I've spent hours and hours and hours and hours studying this thing and still got a lot of questions. John, would you agree? Thank you, John. I appreciate the support. But again, it can be very simple or it can be very complicated. Most of the time, the software is going to take care of that for you. And use a professional if you want to do some planning in that area, especially if you're higher income. Office in the home, we're going to have exclusive use percentage. I mean, you got to have exclusive use of the area. So technically, if you have a room in your house and you're using it all year for business, but then you let your grandchildren play on the computer, technically that 1 hour disqualifies you for the whole year. It's got to be totally 100% exclusive use. You then get to take a percentage of your expenses that you, based on the square footage of your office, and you get depreciation on the house or on the portion of the house in which you have your business. Or you can take what's called the safe harbor, which is $5 per square foot of your big exclusive business use office. So be aware that that's there. Entertainment, that changed in 2018. We can no longer write off the Cardinals or Blues tickets. However, even if it's business related, if it's, if you're talking business throughout, doesn't matter, it's not deductible, period. However, when you buy the beer and the hot dogs at the Cardinals game, that's still a meal and it's still subject to the meals write-off, which is, again, business related, but you can only deduct 50% of it. So, but specific records are required for meals and entertainment. This is written in the law. This is not an interpretation. You got to know who it was, where it was, when it was, how much it was, and what the business purpose is. A lot of times you have that on the charge ticket if you're charging it, but you still have to come back and do the business purpose. Other things to consider on a personal level, you may want to do a contribution to an IRA, set up an SEP before the end of the year, do some 529 plans, which is the college plans. If you have stocks or stocks, you may want to consider selling before the end of the year. If you have some losses you're carrying forward from previous years, then you may want to sell some stocks at a gain to overcome those losses so you have a zero tax. And depending on your income level, stock sales could be zero tax. That could be one of those actual tax savings. If you're taking your retirement, your required minimum distribution is something you need to do before the end of the year. You may want to look at converting your IRA to a Roth IRA. Again, it depends on the tax brackets you're looking at. Talk to your tax professional. If you have money in a flex spending account that you need to get out before the end of the year, don't lose that money. And if you're making gifts to children, grandchildren, take a look at doing that under the annual gift tax exclusion. Slides are available on request. There's cards on the table. Send me an email. I'll be glad to send those to you because we went over a whole lots of stuff. And or give me a card at the end of the presentation. So thank you for your attention. And are there any questions? Bill.
Back to that vehicle, that's an eye-opener. Because I bought a truck earlier this year, and I talked to my accountant. If you're going to write something like that off, it has to be used more than 50% of the time for business, and driving to and from work doesn't count.
Driving to and from work, that's true, but there are some definitional things that can change some of that to business miles. We'll talk. One of the things you need to know also about the vehicle, once you've elected to take depreciation on the vehicle, then you can't go back and forth between standard mileage and actual expenses. Once you've taken actual and taken depreciation on the vehicle, you're stuck there for the rest of the time. So you can't write off your vehicle 1 year and then take standard in future years, because in that 58 cents a mile is included a factor for depreciation. So, any other questions? Guy?
Andy, you mentioned that if our LLC has a meeting and we say we're going to expense things that are $2,500 and under, can we say $10,000?
2,500's the, yeah. You can make it 1,000, but the thing is, Guy, pigs get fat, hogs get slaughtered. 20. So, Mary.
I'm just asking for a friend. If a company wants to use up some money or spend down in this year, could they also buy things like coaching and training and consulting and other services?
Yes,
This year
and
that
then
they're gonna use
they can
next
pay
year?
their accountants in advance too.
There you go, all right.
Yeah, one thing to consider on timing, if you work with Mark, so what you do is you write him a check December 31st, put it in the mail, so he doesn't have to include it till 2020. Okay, so you deduct it in 2019 because you wrote the check and mailed it. Mark doesn't include it until he gets it in income. I'm working for you, Mark.
Get much time as you need, Andy.
Are there any other questions, or did I totally confuse you? All right, well, thank you very much.